This is FinTech Futures at Sibos, and I'm joined by Natalie Blyth of HSBC. How are you?
Very well, Paul. Good to be here.
Excellent. You've been enjoying the conference so far?
It's been great to be back in person again and meet lots of people. Some of them have shifted roles a bit,
Sure.
and the nature of the conversation, as ever, evolves.
Excellent, excellent. So just to get started then, we're going to give a quick introduction to yourself then and your role at HSBC.
I'm Natalie Blyth, and I'm the Global Head of Commercial Banking Sustainability, which is a relatively new role in the bank. I ran trade for 6 years prior to that.
Excellent, excellent. So you're here speaking then on a panel about harnessing big data towards ESG compliance. So to get started then, what's your take on the current banking landscape when it comes to ESG? Is things starting to move now?
So things are definitely starting to move, and I think there was the Paris Agreement to begin with, and then COP26 I think was where there was a real noticeable pivot, and we'll look back and say that's probably the moment that banks and corporates engaged. So we've now got tons of commitments, including our good selves in terms of what we're going to do in terms of hitting net zero, the up to $1 trillion of financing that we're going to do in sustainability. We've got policies on the hard to abate sectors like coal, oil and gas, etc., and power and utilities. We've got intensity targets as well as policies. So the question is, how do we actually now move into implementation and operationalization of all of these targets and policies?
Excellent. Well, I guess that kind of leads on to question number two then. Like, what is HSBC doing then at the moment then to kind of like really try and drive and push and hit those targets?
So really, we are, in the commercial bank, we've got 1.4 million clients. And if we leave stranded clients behind, that does not solve the problem. So just exiting and reducing isn't the answer. What we've got to do is be that trusted partner and transition as many of those 1.4 million as possible. So that's one lever. The second one is, because of who we are in trade, number one by a factor of 2, supply chains being 80 to 90% of the footprint on the planet, whether that is carbon footprint or your labor footprint on the planet, we've got a responsibility to transition end to end as well. And then really be the bank of choice on that new economy. You'll be aware that there are tons of new startups really focused on climate tech and broader sustainability tech as well, societal tech. Making sure that the financing gets to them, that we can scale them up because they're part of the solution for the 1.4 transitioning. So we're really on a mission to move everybody to a low carbon economy and a new economy for the future. This is a whopping industrial revolution. Nobody's business model will remain untouched.
Excellent, excellent. Now I guess how important then is collaboration then in terms of like trying to hit these targets and working with fintechs and other businesses?
So if you take a step back, climate change is a wicked systems problem. Nobody solves that on their own. So collaboration, partnerships, public-private, making sure that we can get finance into harder to bank areas, whether it's deep into supply chains at one end of the spectrum, or whether it's into funky new technology for the infrastructure of the future. But some of these can be 19, 29-year projects. Are we comfortable with the technology risks? So really splitting out the risks and understanding who can come in and collaborate and help sort of contribute to financing the necessary infrastructure to hoof the economies over to the new one.
Excellent, excellent. So, I mean, looking to the future then, are you optimistic when it comes to hitting these targets then and really kind of achieving kind of change then?
I think it's a real challenge. I am optimistic that we will get there because I'm naturally disposed to the positive of human potential, and the new technologies coming through, there's going to be enough for us if we get financing early enough to achieve the goals. So yes, I'm optimistic. I'm less optimistic as to whether it's going to be an orderly transition. So I think we are going to suffer policy shocks, and we're going to suffer some supply chain shocks. And those are going to disproportionately impact some of the smaller clients and the SMEs. They're all part of bigger supply chains. They wake up one morning and they find that their buyer or their buyer's buyer needs to have a carbon footprint from all of their supply chain, needs to have an ESG scoring. And we've got cohorts of clients that just don't have the data, they don't have the resource, they don't have the know-how. So as a bank, we really need to lean into this, and it's more than just financing, it's facilitating as well, and it's absorbing the risk that we can absorb.
Excellent, great. Well, thank you so much for speaking to us, Natalie. It's been a great chatting with you.
Paul, you're welcome.
Excellent, nice.
Thank you.